Can you buy real estate, build a massive portfolio, build tons of passive income with none of your own money? This is the hottest topic on the internet when it comes to real estate investing. My wife and I are self-funded. We own 87 units of investment property real estate. We're under contract to buy another 56 units. We're going to weigh in. Can you do it without money? Is that a scam or is that the hidden way to wealth? Stay tuned to this episode and we're going to discuss it and find out. We are here, Nick, filming in the home studio, and there's challenges. There's weed whackers going on. We've got massive inflation going on. We've got Joe Biden ruining the economy, man. It's a tough day. It's a tough day, but here we are. We're making content to help the people out.
And we're trying to buy real estate with no money down.
No money down, Nick. I'm very adamant about this. I'm very passionate. It's going to be a spicy episode, but let's be pragmatic. We're going to be pragmatic. We're going to be not biased about it. So if you're not familiar with what this means, this is the creative finance wave. There's a really big influencer out there. I've spoken to him. We've gone on the phone. He's a really nice dude. He's from the Midwest, but he's like, here's how I bought $25 million of real estate with none of my own money. No money down real estate is like one of two things. Okay. It's either I'm borrowing money from a private money lender for my down payment. So when you buy real estate, you borrow money from the bank, right? You borrow for an investment property, typically 70, 75, 80%. I've done 80% for a majority of my transactions of the money, but you got to come up with the 20% down payment. Real estate requires real money. And lenders will ask for proof of funds. They want to see the money, right? So these guys are saying, and gals are saying, I borrow money from a private money lender for the down payment, then I borrow money from the bank and buy it with none of my own money. And then I owe the private money lender for my down payment. I owe them the bank, and that's cool. We'll talk about why that doesn't always work. Or people are saying, I do creative financing. I do seller financing. I find someone who owns this apartment building with no debt. The 56 unit we're under contract to buy. Fingers crossed. We're getting there. We're under due diligence right now. The seller has no debt. They've owned it since 1995. So they have no debt on it. So then they will go to the seller and say, I don't want to go to the bank. I want you to be the bank. I will pay you instead of paying the bank. I will take over the property, but my debt will be with you. The seller will carry the note. So that's defining there might be other ways they're subject to and all that. We're not going to get into that. Those are the main two ways that people are saying you can buy real estate with no money. Because then with the seller, you could say, well, I'm not going to put any money down. I'm just going to finance it through you. The seller's the bank. Instead of going to JP Morgan, we use Michigan State Federal Credit Union. You avoid all that and you go to the seller, which is very advantageous because the seller doesn't require an environmental survey. You'd be stupid not to do that. The seller doesn't require an appraisal. It's just a terms and agreement, right? So it's less money out of pocket. It's less hurdles to jump through, right? Because I buy a property before this, we bought 16 units for 1.344 million. The bank says, I'll lend you 80% up to appraised value. If she don't appraise for 1.344, they're only going to give you 80% of what it does appraise for. But that's a good thing because, and we'll get into it, but we can start with this. You want the bank to look at what you're buying, especially if you're brand new, because they'll kind of swat they're like your parents when you were a little baby trying to put your fingers in the electrical outlet. They go, don't do that. The appraisal is their way of saying, don't overpay. With seller financing, you don't have that. But that's essentially what it is. The bank is your friend. That's where people I don't understand why people are crapping on these banks, man. The bank is your best friend and the bank's more secure than the seller. What I want to know is how many of these sellers have called those notes or just said, you know what? Actually, I own this property. You don't own this property. I own this property. This paper we have, good luck. Because again, think about it. If I'm 24 years old, I have no money. I find some multi-millionaire seller who's going to sell me the seller financing. And we have we have a legal document, all that. They probably have better lawyers than you have. They probably have more money than you have. You know what I've learned about lawsuits? It's all about who's got the money and the time. It's not about who's right or wrong. It's who's got the money, who's got the time. That's something to consider. It's not all what it's cracked up to be. We've got a couple bullet points we'll go through about why, it could work or it can't work.
So Tony, why wouldn't the seller just want all the money?
Okay, this property we're buying, seller owns it, no debt. He wants the money to go do a 1031 exchange, which we've talked about on this channel, so go watch those videos, into a different property. Now, let's say he was, he's in his probably late 60s. Let's say he was 89 years old and he doesn't want to, at his end of his life, and he doesn't want to 1031 into anything else. He wants to pass it on to his kids, but his kids don't want to manage the real estate. He then can pass them on a note to where they're receiving the cash flow from the property because you're paying them as a seller finance, but they're not managing it. That's one way. Number two, I've seen, and I've had this brought to me, it was an 8-unit here in Michigan. The seller ran other businesses. He bought this 1 8-unit. He bought it all in cash. He wasn't good at managing real estate. So he didn't need more money. He just wanted the cash flow without the management. So those are good ways that seller financing actually is a good option. That is something like valid. Like if you get that instance, I think it's really good. You just have to cover your downside with it.
What are usually like the terms? Is it still like a 30-year? Is it 15? Is it whatever they want it to be?
The wild, wild west, buddy. Whatever you want. Whatever you want. So this guy was offering me like a 30-year amortization, which is rare in multifamily. Usually get 20 years. 25 years is really good. So that's what we get is 25 years. 6%, but then he wanted 10% prepayment penalty, meaning if you paid off the loan early, you have to pay off the loan plus 10%. So it's whatever you guys decide. Normally, if you're going seller financing, you're getting better terms than you would from a bank. That's kind of the whole less money down or more favorable debt versus going to a bank. If you get the same terms from a seller as you would the bank, why wouldn't you go to the bank? Because like I said, just in the back of my mind is what if this seller tries to call the note, or like a bank has rules and regulations and auditors and a board of advisors and a CEO. This seller is the seller. I would feel very concerned that some mischief could occur more with the seller than with the bank. So that's the pros and cons of those terms, right? But again, who's enforcing those terms? Just the seller. Probably for every success story you've heard with seller financing, there's probably 10 more like bad stories to where then the seller said, oh, you were, who knows? You broke something here. I want the property back.
Now, does the seller have to own the property outright to do this?
Correct. If the seller has debt on the property, they cannot do this because this is what would be called, this is when you sign a loan on a mortgage, you are giving for multifamily, for apartments, you are giving the lender what's called first position on that loan. They are first source of repayment. If you default, they get paid back first, right? They are in control of that debt. They will not allow you to take what's called subordinate debt. And this is where the whole, well, I will use private money to come up with let's say you're going to the bank, you're getting 80% financing and you need 20% down. And you'll just say, oh, well, so-and-so on Instagram said I can just go borrow the 20% from someone else. They won't allow you to do that. If you tell that to a lender, at least a reputable lender, all the lenders we've gone through, they will not allow subordinate debt. They do not want to know you have no skin in the game. That's a big no-no. They want to know the lender is your partner. The bank is your partner. They're saying we're putting up 80% of this. They're taking the biggest risk. They've got more money in the deal than you do. And then if you're going to say, well, I'm not putting any money, I'm actually borrowing money from Uncle Joe or from Aunt Sally or from whoever for the down payment, and I'm paying them interest on it, right? That's what private money is, hard money lender, right? They'll say no. And if you don't tell them, you could be at risk of defaulting that loan and breaking what's called your debt covenants. When you take on debt from a bank for a multifamily, you've got covenants, you've got agreements you have to stick to. You have to submit an annual review. You have to meet a certain return on your investment. You have to pay the bills. You have to keep it in good condition, right? All common things that of course you would agree to do, right? You can't do that. So these people who are touting that this can be done, I question, what bank are you going to? What lender are you going to? Are you lying to your lender and just not telling them that you'll do that? That's scary, which also then brings to the next point of how is this happening? Again, maybe is this a fugazi, right? Because the lender wants to see your bank accounts. Before they lend you millions of dollars, they're going to say, show us your personal financial statement, which we've talked about. We want to see your credit, right? They'll pull your credit. Not always, but usually they do. Once you establish a relationship, they won't pull your credit anymore. But every time I've first done a deal with a lender, they do a soft pull on my credit. Multifamily loans aren't reported on your credit, so that's great. But then they say, where is the down payment coming from? So how did these people buy these apartments? They're talking about, I did 100% financing, because the lender's going to say, you can't do that. We won't do that loan. You have to have money to do this. They usually also want to see, even after you do the down payment, you have reserves. they will not let you use your last dollar to go buy an apartment because they say when the roof breaks or when the boiler breaks or when the apartments need to be turned because people leave, how are you going to pay for that? So that's something else that just kind of doesn't make sense to me for someone who owns 7 apartment buildings.
Now, is this sort of creative financing pretty rare?
It's not common. Finding great question, Nick. See, this is a good episode, guys. Give some love. If you're enjoying the content, comment below, let us know, give us some love because this is, I hope, good stuff. Because everyone's looking for the freaking shortcut, man. Everyone's looking for the shortcut. Is it rare? It is because, finding good multifamily real estate is very hard right now. Everybody wants to get into real estate. Everybody wants to get in apartments because of inflation. Inflation is so high. We are becoming more and more a renter nation. We're in a housing crisis right now. We really are. Sellers who are selling homes have low debt if they bought in, pandemic, pre-pandemic, whatever era, right? They have 3%, 4% debt. They know what their home is worth, so they're listing at a high price. Someone's coming in today getting 7%. They can't pay as much as that house is worth because the cost of money is so much higher. So you know what people are doing? They say, okay, they're taking the house off the market and they're putting a renter in because they will get more in rent than their mortgage payment. And the debt can be an asset. When debt is 3% or 4%, when I've borrowed money at 3 and 4% and inflation 7%, my debt's an asset. I've borrowed money cheaper than it costs money to be printed today. We're moving to a renter nation. Everyone wants to get into apartments because as inflation rises, rents rise. As rents rise, apartment valuations rise, right? So you're looking for an apartment. You're looking for an apartment with no debt on it, which is very rare because debt is a tool, right? Debt is leverage. Like I'm never going to pay off my apartment. I should never say never, but in the near future, I'm never paying off an apartment because why would I want that, right? Now you're looking for someone who has no debt, who wants to sell and does not want to cash in. They just want to take a monthly payment. So again, either they're not operating it right, they don't want to operate it, or they just want to pass it on to their kids, whatever. You're looking for a subset of a subset of a subset. To find a good apartment deal right now, Nick, you might have to look at 100 deals to get a good one. If you're looking for a good apartment deal with seller financing, you're maybe looking at 1,000, 2,000. Here's like my winning argument that no one's been able to beat me on. In all that time trying to find this needle in a haystack of a haystack of a haystack, why don't you just go get a job and make money? Learn how to get money. There's 3 rules to money: how to get money, protect money, and then multiply money. Real estate is multiply money. Real estate is a slow way to get really rich and really wealthy. Slow way to get really wealthy, right? By doing this no money down stuff, you're trying to bypass rule 1 and 2. If you have no money, fair to say, you never learned how to get money. Or like we've talked about in our other episodes, go check those out. Money Mistakes Keeping You Broke, Habits That Made Me a Millionaire. Go watch those. That's why I do those. I don't just talk about real estate, I talk about how to get money and protect money. That's how my wife and I were able to buy the real estate we did, because we learned how to get money. I built a business. My wife had 3 freaking jobs, 3 jobs at one time. As a school teacher, she had 3 jobs. She would nanny, she would do some other stuff, right? We learned how to get money. We lived on less than what we mean. And then we took the excess and invested in real estate. But that's not good enough for people nowadays, Nick. They want to just shortcut it and go straight to it. What I argue too, so when you run an apartment, you're running a business. You have to learn how to get money. You have to learn how to collect the rents, how to increase the valuation, how to increase the rents, right? You don't buy an apartment and say, oh, I'm never going to increase the rent. You'll go broke. Don't go buy the apartment, right? You need to learn how to protect money. You need to learn how to pay the bank back. You need to learn how to pay the taxes. You need to learn how to pay the utilities, lower the utility bills, right? That's the way you add value. How can you learn to do that if your savings account says $0? You can't even protect your own money. You can't even do a budget on yourself. If you can't do a budget on yourself, don't go buy an apartment. You'll lose your shirt. It's a business. Start with yourself. Run yourself like a business. Save some money. Then if you get seller financing, great. You should at least have money in reserves. Even if you did some no money down deal, great. But you should have money in reserves. The bank will not lend you money to go buy real estate if you have no money. So don't try to look for a shortcut, because you can go broke. You can go deeply broke by doing it.
So Tony, I know you've kind of brought me to some of your apartments. I've seen them. I know you've talked a lot about increasing the NOI and increasing the property value, but how would you do that if you didn't have money?
Let's give Nick a test. Nick, what's NOI stand for?
Net operating income.
Guys, comment,
income minus expenses.
That's it.
Equals NOI.
I'm glad someone's listening. Thank you, Nick. When you buy apartments, it's all about NOI. Apartments are business. Your income minus your expenses. You build wealth with apartments by buying value add apartments. Like Nick said, we've shown you. Go watch the videos. I buy good apartments in good areas that have low rents, outdated units, deferred maintenance. We then take it over, but spend money to fix those problems. Could you ask the lender for money to do that? Yes, but unless it's a major like rehab project, they're usually not going to give you a budget for that. So you need money to do this. And I asked someone who was touting, we did all this with no money. I said, how did you fix up the units if you had no money? I didn't really get an answer, right? They kind of just talked around it. How do you do it? Are you going to use a credit card to do that? Things are expensive with apartments. Okay. Unit turns usually cost us $3,000 to $5,000. Roofs are expensive. Utilities are expensive. Parking lots are expensive. New signs are a few $1,000s, right? With permitting and all that. It costs money to fix up apartments. Don't get yourself in trouble by trying to jump into things without having money. I couldn't see buying an apartment if I financed everything and I had no money, and then you would be running on such thin margins. I really just don't think it's doable, because then if like, let's say you buy a 7 unit, you're like, well, okay, but I'm making $500 a month in cash flow, and then I'm just going to use that cash flow just to, fix it up. But then 3 people move out. Because you know what tenants do who are paying lower rent than they should because of the market, who then had these mom and pop owners who would let them pay late and let them pay half this month and half next month, or not fix. This is what we see all the time, dude. Well, I was paying $600 a month. Market rent is $1,000, but none of my issues were fixed. Now we want to bring them to $900, still below market rent. But they say, okay, I'll do it, but can you fix my stuff? Fair. If I don't have money, how am I doing that? Or tenants say, oh, new ownership's in, this, Susie who used to let me get away with murders out, I'm moving. Now you're vacant. How are you paying for that vacancy? With couple $100 a month. It doesn't make sense. If it doesn't make sense, it don't make dollars. Okay, guys. So if you enjoyed today's episode, let me know. If you're listening on Spotify or Apple iTunes, please leave us a 5-star review. Again, not knocking seller financing, but giving you perspective. Hopefully I've just taught you that there are no shortcuts to success and to really assess all options, right? And at the end of the day, becoming educated and informed. If you do seller financing and you're crushing it with it and we're wrong over here, let me know. Leave a comment below. I love learning too. I'm not saying my way is the only way. I'm just giving you perspective from someone who has self-funded and owned 7 apartment buildings. Okay. If you enjoy the content, let us know, comment, subscribe. If you want to learn more about real estate investing, how my wife and I have done this, how we built a business and then started investing in real estate, 87 units at cash flow, I've got 2 things for you. Number 1, I've got my book. It's The New Rules for Financial Freedom. It sells for $19 on Amazon. Your gift for free. Click the link below in the description. Or my real estate masterclass. I walk you through the value add strategy. I walk you through how we are repositioning apartments, how we are putting money down, but recycling our money, getting our money out via cash out refinances and buying more apartments. That was a live training I did for people who paid $2,000 to come learn this from my business coach and I. Put it for you in the link description. Click those links, learn, become educated, build success. Don't look for shortcuts. Until next time, we'll talk soon. Thanks.